Good afternoon to all attendees and esteemed panelists. On behalf of the organizers in West Africa, a very big thank you for making time to attend this afternoon on this most fascinating topic. And a warm welcome to this afternoon seminar where we'll be focusing on Southern Africa and the outlook. We're delighted to have in excess of 250 participants attending this afternoon. I believe it's the record for the year. And we'll be engaging in our panel discussion for approximately 45 minutes, leaving the last 15 minutes for Q&A. Please use the chat function, forward your questions to us, and our panel will do their best to answer them at the end of the session. Now to introduce our esteemed panel, my name is Varusha Stubin. I'm a partner at Baker McKenzie, and I specialize in customs and international trade. And joining me this afternoon is Chiedza Madima, who's the head of South Africa Research and Operational Risk at Fitch Solutions, Paula Armstrong, who's a director at FTI Consulting, and Greg Pearson, a co-founder of Grit Real Estate Income Group. So, welcome everybody. A brief introduction to the topic this afternoon. The economies of South Africa, as we know, Southern Africa offer a diversity of human and natural resources. And this has the potential to yield and inclusive growth. The onset of the global pandemic was delayed in the region, but these countries have acted quite swiftly to insulate themselves from the worst of the crisis. Amongst the high economic and social costs, they have cautiously started to reopen their economies, but with that comes, as you all know, a risk of heightened infection rates. Deal-making activity in Africa dropped in the second half of 2020 when we compare it to the previous year. Deals were down in volume and value compared to 2019. As the continent gears up for post-pandemic recovery in 2021, the opportunities presented by free trade across the continent, foreign investment opportunities, new partnerships, and trade relationships, as well as the post-pandemic focus on technology, healthcare, and renewable energy, will be, I think, key factors to attract valuable M&A activity to the region. The African Continental Free Trade Area could also be a game changer for the region. But as we know, there's still a lot of work to be done to build an enabling environment, especially when it comes to infrastructure. Individual countries in the region will sadly face a mixed economic outlook. So without further ado, I'm going to ask Chiedza to give us an overview of the region. She's going to talk to macro business outlook, key risks and challenges. Over to you, Chiedza.
Chiedza, if you could just unmute yourself. Yeah.
Yes, thank you. Thank you for that introduction. And just to kick off, we at Fitch Solutions expect that Southern African economies will return to modest growth this year, supported by rising global demand for mineral and agricultural commodities and the gradual normalization of domestic economic conditions. And base effects will be a key factor in the growth bounce back, but earnings per head may take years to return to 2019 levels. And in terms of other risk factors, we could see an increase in social stability risks, especially as subsidies and social support measures are rolled back while jobs remain elusive. And the risk of further supply chain disruptions and, of course, higher than expected inflationary pressures could pose further headwinds. And while we are broadly bullish on commodity prices in the short to medium term, they are not likely to reach the new highs as we saw in the first half of the previous decade. So that's just after the global financial crisis. And this will act as a further constraint on regional growth in the years ahead. Southern Africa will be the slowest growing region in sub-Saharan Africa, weighed down by very weak growth in the regional heavyweights when you look at South Africa and Angola, as well as sluggish recovery prospects in Zambia and Zimbabwe. So for the region as a whole, we believe that it will take at least 3 years to return to 2019 economic output levels. And for some, it can take as long as 5 years. The recovery will depend on the pace of the rollout, the containment of outbreaks of variants, and of course the management of public health systems, as well as the maintenance of social stability and access to external funding. So for governments to steer out of this crisis, the focus really should be on reform implementation geared towards boosting development of bankable infrastructure and private sector job creation. And a strong sort of policy setting will be especially important as we enter a global environment where we believe investors could increasingly become more selective on the basis of macro fundamentals, on the basis of risks in the domestic business environment, which could see prolonged stress on markets that are slow to reduce budget deficits, that are slow to boost resilience and promote attractive business-facing policies.
Thanks for that, Chietza. Fantastic intro to the region and what we can expect. I guess a burning question, especially for myself and many of you out there, is tourism. I mean, we can't wait to get onto planes again and enjoy a bit of a holiday. So how do you think the tourism sector can be reignited after all the effects of the pandemic? As we know, the tourism sector has been taking a beating.
Yeah, in the near term, getting travel and tourism back essentially means rebuilding confidence in travelers and putting secure and safe, globally acceptable processes in place. And this applies to the whole travel and tourism value chain. And the sector will benefit from stronger end-to-end tech-enabled solutions and a workforce that's up to the task. So another near-term effort should be to incentivize local and regional tourism through more targeted low-cost options and market segmentation strategies. However, unlike in Asia and in Europe and North America, this is limited due to low income levels in the region and other logistical hurdles. As vaccine rollouts progress in other parts of the world, we may see the development of travel bubbles, travel corridors, and e-vaccine passport systems start to gain traction. So the question then becomes, how soon will vaccine rollouts really make a difference? And first, it's important to take a hard look at the state of play, right? The loss of international arrivals has been devastating for the sector, and recovery in this sector, or this segment rather, will be quite bumpy. The uncertain outlook for business and sort of long-haul travel is also leading international hotel chains to reassess their footprint, and focus will be on operational resilience and agility. So broadly across the region, we saw almost 80% drops in annual tourist arrivals. For example, in Mauritius, where tourism accounts for nearly a fifth of total employment, we don't expect arrivals to return to 2019 levels until 2024. In South Africa, where tourism accounts for about a tenth of total employment, the near-term outlook is also bleak. In fact, room occupancy levels were hovering at around 50% pre-COVID, and with occupancy rates likely to remain at a subdued 32% by our estimates, we could see more players seek to close their operations and further delay or cancel investment decisions. So looking ahead, in our view, the future of tourism will be digitized, it'll be more targeted, it'll be more environmentally sustainable and geared towards experiences rather than just destinations. And in an emerging market context, this will involve a focus on sustainability, biodiversity, and especially ecotourism and voluntourism. So the region should look towards re-energizing the sector with a focus on sustainability and also making tourism safe again in two main ways. So from a public health perspective, and also in the medium term from a security risk angle. So in our Fish Solutions Crime Vulnerability Index, where we look at the prevalence of crime and police force capabilities, most of the region ranks in the bottom 100 globally out of 201 states that we survey. And the key underperformers for this metric are Mozambique, ranking 176th, South Africa, 170th. So there are also concerns regarding social unrest in the region, especially in Zambia, Zimbabwe, Angola, South Africa, and of course, terrorism risks in northern Mozambique. So I think there needs to be a greater focus on boosting regional security stability to support the sector as well.
Great. Thanks, Chet. I think, a related question, and I suppose it's a key aspect for the region. How do we find solutions for the key challenges of poverty, education, unemployment, and economic growth? Between, Chieta and Paula, I'd really like your views on that.
Right. I suppose from...
Apologies, I've just unmute myself. Thanks, Purusha. I think one of the key focuses of any kind of economic recovery in the region will have to look at what happens to youth in the country, on the continent. I think African countries typically have very young populations. And I think this is, what we think of as our sort of demographic dividend. We have a really young population, really optimistic population, actually, if you look at sentiment surveys in the region. And there was certainly a lot of hope early on that because of this, because of the kind of clinical outcomes in younger people for COVID-19 being remarkably better than for older parts of the population, there was certainly a lot of hope that the youth would, kind of weather the storm and that Africa might get off the hook a little bit easier than other countries. What we've seen, however, that one of the key non-pharmaceutical interventions in terms of managing COVID-19 has been a need to limit interaction amongst people, and along with that has gone the closing of schools. So education for large parts of the of young African people, in Southern Africa in particular, has been halted, and these are in countries where there's limited internet access, there's limited infrastructure to access education outside of the classroom. So I think in terms of social mobility, in terms of actually ensuring the employability of African youth in their own countries and internationally, this interruption in education is a major setback. The World Bank estimates that this setback would cost about $7,000 per child on average, and this is in countries, in some countries where the annual per capita GDP is 1,600. So it's a significant impact over the lifetime of a child, and what it means for the outcomes in one's life. So we know there's a strong social gradient in health. We know that as people move up the socioeconomic distribution, life expectancy increases and health outcomes improve. So this interruption, particularly for the youth in terms of their education, their employability and future prospects of moving out of poverty and moving up the socioeconomic distribution, have really been jeopardized by COVID-19.
Sure. And what do you think would be some of the long and short-term consequences if, as a region, we fail to address these challenges?
So I think in the short term, and I think it's something Chid's referenced earlier, it's something we certainly have a lot of concern about in South Africa, but also in other Southern African countries, is social unrest. We have a large young unemployed population who have had aspirations to perform their parents from a sort of generational social mobility perspective. So we will have a lot of frustration. So certainly in the short term, social unrest is a threat. In the long term, again, it's this social gradient in health is one of the more concerning long-term effects. So you will have a population that is significantly poorer than it was for quite an extended period of time. I think Ched's also referenced how long it's going to take to get back to levels of economic growth that we had in 2019. And there'll be quite a bit of difference over the region. But what this means for the quality of life expectancy, health outcomes for populations and for people, for countries is very concerning. So I think these are some of the main short and long term impacts of COVID-19 and employment.
Yeah, and sticking with the question of employment, what are the key areas that are hamstringing employment creation in this region, and how should labor markets be actually reformed to generate jobs to solve this problem?
Great. I'll take that one. I think it relates to one key area of labor, the labor market in the region. Southern Africa is deeply uncompetitive from a labor costs point of view, especially when it comes to indirect costs. So rigid and archaic labor regulations make industries obsolete and workers too, especially in a world where businesses need to be more agile, responsive, and resilient. Governments should focus on making labor market regulations a lot more flexible if they are sincere about boosting long-term job creation, especially for the youth. And it stands, as it stands right now, it's very difficult for businesses to navigate tough regulations, high severance pay requirements, and long redundancy notice periods, and of course, large politically influential unions. And the end result is that the environment is not fit for purpose for labor-intensive sectors and the gig economy. So lastly, governments should also avoid becoming the employers of last resort. This doesn't actually support growth, and it can lead to bloated public sector wage burdens. Instead, states should be in the business of creating policies that encourage job creation rather than trying to create the jobs themselves. In fact, there should be a move towards trimming the public sector wage bill, and the next phase for countries that are serious about development, that are serious about labor market reforms, is greater efforts geared towards boosting the participation of the private sector, and of course measuring their own public sector performance against clear KPIs, focusing on fiscal consolidation, of course boosting accountability and pragmatism.
That's a great point, Chiedza. I have a question for Greg, turning to infrastructure and development. What is being done to build an enabling business environment for the region, especially in relation to infrastructure?
So I think the big focus is local partnerships and skills transfer. And a lot of the developers now going into the different regions and different countries are more focused with regards to building sustainable relationships in the countries, and not just the level of investment, but from the grassroots up. So skills transfer through from professionals all the way through to the developments that are being created at the moment. And I think, Africa as a whole has often been tainted from an international point of view that they want these mega returns when they come to look at Africa. But we also need to create a sustainable environment. If we have investors that are looking for these super returns, we find that real estate and especially the infrastructure of these big projects are not sustainable because they can't pass through the different cycles that the countries and the continent faces at various times. And if you look at the waves and the cycles of the various countries, often it goes through these five-year peaks and then starts going into a trough. And some of the time when the companies and the developers and the spend has been set up with more of a PE kind of structure, the guys are looking for returns on the wrong side of the cycle, which then doesn't help with the skills transfer. It doesn't help with the sustainability of what's being built in Africa as a whole.
And what about ESG sustainability? Do you have a view on that?
Yeah, definitely. I mean, if we look at ESG again, if we look at a sustainable developable platform across Africa, ESG is a part that has to come into play. And you'll find that a lot of the developers and people putting together big business nodes at the moment are playing a lot more into this than they were historically. And what that means is it's not just enclosed in the fence line of the development, but more outside of what is being created in these nodes as well. And what I mean by that is, historically, as a developer, we build a building. Today, we're building a building and we're building the infrastructure around that as well. And with the ESG that comes along with that, the sustainability of that, making sure that the skills transfer, the local labor that gets used, making sure that everything that is being done within the development is to a global standard as well, that all adds and contributes towards the ESG. So it needs to be embedded in the organization as well. So the sustainability of the development as well as the disposal thereafter. It doesn't help us having a mindset that we're going to come and we're going to build in a foreign country and we're going to make as much money as we can and we're going to leave. But more of a mindset of let's go into a country, let's invest in that country and let's build from there and create a sustainable business. And if you look what, just an example, if you go into our Mozambican office at the moment, we've got 23 Mozambicans and we've got 2 expats. Now, that business is viewed as a local business. It's not viewed as an international business, hence the reason why there's so much that's happening more for us in that country. And I think that's the way and the mentality that a lot more people should look at our continent, to say, how do we come in and create a business that is going to be local in the environment, but global with regards to the way it thinks? And with that comes a lot of sustainability off the back of the investments that they make as well. And I think sorry, one last point. Sorry, carry on.
No, go ahead, Greg.
I was just going to say one last point on that as well. If you look at real estate across the globe, it's hundreds of years old. Where if you look at real estate in Africa at the moment, it's probably something, as much as there's been buildings for hundreds of years, there aren't these big organizations and conglomerates that can invest for the long term. A lot of people are looking to invest for the now, and we have to shift that mindset. If we don't shift that mindset, then there is going to be problems for us in the short and medium term, and the sustainability and building Africa is going to be that much more difficult. So what we're trying to do is create awareness around real estate in Africa is the same as real estate in Europe or any other first world country. Yes, we've got a lot more tax laws to get through. We've got land issues to get through, but there's professionals and locals in the country that understand how to circumvent those and navigate those to get through to make sure that your investments are sound as well. So we need to have that outlook when we're looking to long-term investment and ESG within Africa.
You mentioned briefly that landlords are increasingly being responsible well beyond just what they think that they're responsible for. And there's a theme around development beyond the fence line. I'd be interested to know whether this is a turn off for landlords, or is it something they're just having to adapt to?
So for me, this is something that it has to happen. And the reason why I say that is, if you look at, again, going back to real estate in Africa or first world countries, facilities management, asset management is a great part of real estate, and we lack that in Africa. It's something that we spend a lot of time in, making sure that the infrastructure around your area and around your node is suitable for the area that you want to develop in. So if you go back to retail 4 or 5 years ago, often the pieces of land that you had within the residential realm where you're going to do your development, the infrastructure was way behind where it needed to be. So you had to go and do those investments to uplift the community, uplift the area, to make sure that your development was sustainable. Now, historically, that was always an issue, but we're welcoming that, saying, yes, our returns need to come down slightly because we're spending a lot of money outside of our fence line. But what it's doing, it's uplifting the local community. It's creating more jobs in that local community, and it's creating sustainability of real estate. So we could go with blinkers on to say, we're doing this one development and we want to maximize our returns. But then what would happen in 5 years' time? And we don't have that mindset. I think the mindset that we need to have, and we all need to have as investors in Africa, is what can we do today to save tomorrow? Or what can we do today to grow tomorrow? Not what can we do today to make as much money out of tomorrow.
Yeah. agree with you. So it's not about short-term returns, it's about long-term investment and taking a vested interest in the project and the region itself. You know, given where we are, the obvious elephant in the room is the pandemic and the ravages of the pandemic. So I want to turn to the topic of health, the health sector. And the question that I know is on everyone's mind is, how can the region find solutions to this healthcare crisis, so to speak? And, you know, it's so much, we're all under the lens at this point in time from a healthcare perspective. Paula, do you have a view on that?
So I think it really is a desperate question, and it's a desperate situation at the moment. We're hearing reports, certainly of what's happening in Zimbabwe. They are completely overwhelmed. Even in a country like South Africa, where yes, we do have a healthcare system which at times fails on the quality front. We have very good people in place, and relative to the rest of the region, it is quite an advanced system. And even in this system, we came under heavy pressure in the first wave, and even more during the second wave. So I think we certainly are seeing health systems at breaking point in the Southern African region, and we're hearing reports of government hospitals relying on NGOs for access to PPE and very basic equipment that they need to handle the pandemic. So the situation is quite desperate, and there is very little time to react and respond and put measures in place. So I think in a kind of medium to long term view on what's going to protect these health systems and what their best way out of this absolute carnage is going to be access to vaccines. Vaccines it's a very interesting area which I think we're all becoming experts overnight on vaccines and how the rollout works, what they're good for, what they're not good for. But one of the key objectives of vaccination is to control the rate at which mutations happen. So this is where African countries are going to face significant challenges, because you need a certain level of coverage and immunity at the same time for a population. You essentially need to stop the travel of the virus. You need to prevent it from moving from one person to the next and evading the immune response that's already in a person. So vaccines are going to be absolutely essential to give any of the health systems a fighting chance. And if you're able to get a handle on mutations and variants of the virus, you can prevent and slow down some of the resurgence and the waves of infections that happen, because that's what really puts pressure on healthcare systems. That's where systems collapse. And this is really what we have to prevent against. Because ultimately, if we don't have that level of immunity, we have to keep the economy closed, and we have to go through a series of lockdowns to save lives. So ultimately, the sort of medium to long-term health of the healthcare sector is going to depend on getting access to vaccines. And short of that, we really are in very deep water.
Yeah. What would be a major threat to the health systems if we don't get this vaccine situation sorted, and if we don't find a solution for this problem?
So my greatest concern with regards to the absence of a vaccine is that we will see rapid mutations of the virus, and we won't necessarily pick them up. We won't be able to track them. We won't necessarily see them until they have moved to other parts of the globe. So in countries where we've seen variants and mutations, South Africa, Brazil, the UK, these are all countries that have the capacity to do genetic sequencing on viruses. So they do the surveillance and they're able to pick them up. In African countries, other African countries, Southern African countries, this is not necessarily the case. So my greatest concern is that we will get a level of mutation in the virus that we don't pick up until quite late. And what that means for vaccination rollouts, vaccination regimes, is up in the air at the moment. So and I think that has a global implication. So we keep hearing that nobody's safe if we're not all safe. And I think this is what we're talking about. So the concern is this rapid mutation of the virus that we won't necessarily pick up given the healthcare infrastructure on the ground.
And just with the lens on Africa, I think we can all agree that we don't know much about what's going on in Africa from a COVID perspective. Why is this?
So I think it's a combination of factors. I think first of all, I just think the statistics aren't collected to the same extent as they're collected in developed countries and in South Africa. I think South Africa is the Southern African outlier. So I think there isn't a lot of testing going on. I think there isn't a lot of reporting going on. So I think there may be a lot more on the ground that we're actually seeing reported in statistics. But also the younger populations in Africa do make a difference. So we know, as I said earlier, that younger populations do actually handle the virus better. So it may be that the healthcare effects are less in African countries. It's very difficult to know what the combination of these factors are, but those would be some of the main drivers, I think, in why we don't know much about COVID-19 in Africa.
So given, I think we agree we don't know much about what's going on in Africa from a COVID perspective, but what does this mean for the future? How do we address the problem, as an international community? Because as you rightly said, for us to be safe, everybody needs to be safe. So this certainly has an impact on the international community as well.
So I think it means that countries who do have surplus vaccine dosages, for example, are going to have to do everything they can to get those vaccines to African countries. So wherever we can, it really is in the global community's interest to do that, to make sure that mutations are contained. So as an international community, I think that, and it's going to be a very, very difficult task now. Already, vaccine diplomacy is already, a bit of a dirty word, and it's playing out, in many different ways. Where it ends up, how we achieve this global coverage within a reasonable space of time. The Economist Intelligence Unit estimates that African countries, if they ever get full coverage, are looking at about 2024. I think that's too long. I think that's too far. We are, the international context is characterized by a shortage of doses at the moment. There are holdups in production. There are spats going on all over the place about who will export, who will import. So I think we have a mammoth challenge ahead, but I think the objective has to be as wide coverage as we can achieve as quickly as possible.
Yeah, I couldn't agree with you more. I think, if I could add my own view on this, I agree. This vaccine diplomacy is certainly a dirty word, and it's quite sad, actually. And I hope we get to a point where, especially the major players, on the globe, are not so introspective, that they would look beyond their borders and see how they could assist one another, because ultimately it's for our collective benefit. So, fully agree
Absolutely.
with you on that.
I think where African countries are really at quite a disadvantage is we just don't have the fiscal space to play in that game. We really are hamstrung in terms of being able to afford to enter the fray. So it's a very interesting space to watch, one that keeps me up at night. So I think we've got a long road ahead.
Absolutely. Turning now to the topic of oil and gas, I think we all agree that it's critical for what we want to achieve as a region, that we get it right. So to Chietza, I guess my question is, what is the role of primary sectors in economic development going forward for the region from a key infrastructure point of view?
Great. The oil and gas industry, in our view, will continue to recover in 2021, but the impacts of the pandemic have really accelerated underlying trends in demand and investment. And broadly for the region's oil and gas industries, we see production and consumption recovering this year. And of course, this will benefit Angola, where we expect a modest pickup in growth to around 1.7% this year. And in Angola's case, despite recent reform efforts, we're likely to see a slow pickup in CapEx growth in the oil and gas sector, largely due to weak investment and still high operational risks. And even though we anticipate a modest rise in production in the near term, the Angolan oil sector will see a decline gradually over the next decade. And with the country's economic fortune strongly tied to oil, this could be quite a worrying outlook. But of course, the real diversification story for Angola lies in the medium-term outlook on the back of ongoing reforms under President João Lourenço, aimed at improving the business environment and facilitating sector-wide investments, so not just oil and gas. And globally, the prospects of decreased near-term as well as long-term oil demands, along with bloated inventories, has given very little certainty to investors. So the shift away from fossil fuel investment and decarbonization will really push the oil and gas industry to become more ambitious in its efforts to decrease emissions and to take a leading role in the energy transition. So we really should be talking about the role that the energy sector can play moving forward and how this can be unlocked through supportive policies that actually seek to deepen industrial linkages and export potential. So according to our oil and gas CapEx outlook in sub-Saharan Africa, LNG export facilities will remain one of the largest segments of regional investments in 2021. We're seeing considerable growth in terms of greenfield investments, capacity expansions, and especially in Mozambique, we've seen continued progress in this regard. It's actually right now at the center of regional LNG development. So to be fair, upstream oil and gas is not really labor intensive, it's very capital intensive. And as investors become more selective and ESG conscious, it's really about the role that policymakers can play in leveraging these assets as well as human capital. So we have seen green shoots in this regard in Mozambique that is poised to host mega LNG projects. Actually, according to UNCTAD, total inward FDI flows over the past decade stood at around $37 billion, and total inward FDI stock is almost 3 times the country's nominal GDP. So Mozambique is expected to garner quite a significant share of LNG expenditure even moving forward. You know, we're looking at over $56 billion on the horizon. So robust investment in this nascent sector, especially the gas sector, actually presents the country with what I would call an existential opportunity to change its economic fortunes. And it's not just about the gas, it's about the policy around the resource. So in the energy sector, Mozambique has done really well in terms of creating a supportive policy environment that includes enabling legislation for project finance. And this has really been key to its success so far. But of course, looking ahead, greater efforts towards security, stability, greater transparency in the sector, and to focus on building industries around gas with downstream linkages will really help to sort of propel the country moving forward. And of course, being able to leverage regional peers such as South Africa will also be key for the country. But when it comes to the future of energy and storage, there's a huge opportunity to exploit regional resources, especially when it comes to wind, solar, gas, and minerals potential when you're looking at PGMs, lithium, copper, cobalt as well. So it's not just a Mozambique or an Angola story. The global sustainability push actually presents opportunities for the wider region too, and especially South Africa, which could, with the right policies, become a green and blue hydrogen investment powerhouse in the region. So this, of course, will be supported by falling renewables costs and higher investment into sort of new carbon capture and storage initiatives. So South Africa is quite well positioned for hydrogen investment, given its good logistics, its deep capital markets, its industrialized nature. So this is really important because hydrogen is really key to the global key energy, the global clean energy transition, and it will enable us to store energy better in the region as well.
Yeah, absolutely. And before you take your eye off your telescope, Chietza, I'd like to know what your view is on the minerals of the future, and is there a need for targeted and connected reforms?
Definitely. I think to develop these sectors across the region, it really will rely quite strongly on a policy push, as I kind of highlighted in the Mozambique example. And when it comes to minerals of the future, the region is quite rich in this regard when you're looking at lithium, cobalt, copper, as well as these nascent gas resources that are being developed. But of course, as much as we believe that South Africa could be at the forefront of this sort of green energy push and hydrogen, for now, when it comes to renewables and especially sort of gas sector in South Africa, even though we've seen quite considerable progress in exploration, the upstream potential will be hindered by a lack of clear regulation, as well as delays related to the Petroleum Resources Development Bill and the harsh operational environment offshore. So overall, the future of the region in that sort of cleaner energy space in terms of minerals of the future really rests on advancements in technology, as well as a supportive regulatory environment. That's the most important factor in our view.
Agreed. Thank you, Chietza. So with exactly a minute to go before we head off into the Q&A session, so I think we did pretty well there. I'm going to turn now actually right into the Q&A. We've received a couple of questions. I'm going to start off with the first one, which is around tourism. And Chietza, if you don't mind taking this one. The question is, specific to tourism in the region, are local governments and tourism bodies doing enough, you think, to promote regional and local tourism as opposed to international tourism?
I think the tourism sector in the region was overdue for a rejigging and a reinvigoration. And I think on a policy level, there's very little in terms of cohesive regional strategies to kind of drive domestic and regional tourism. So to answer it very briefly, I don't think enough has been done on the policy front, but definitely more can be done to at least enable key tourism markets, even within countries. When when you look at Cape Town, Durban, as well as Maputo, Mozambique, Namibia, etc. I think a lot more needs to be done in terms of pushing sustainability, pushing agility in the sector, and of course, from a I suppose from a macro point of view, the income levels in the region just aren't there yet to really fill the gap that we are seeing in international tourist arrivals. So, of course, that'll take some years to really increase the footprint for us to reach the levels that we're seeing in terms of regional tourism in Asia and in Europe. But, of course, policy is the first step.
Yeah, agreed. Thanks, Chietza. Greg, there's a question for you around our neighbor Zimbabwe. Are investors still interested in Zimbabwe? Greg, I think you're muted.
Yeah, so just to look at investment in Zimbabwe, again, it all depends on the investment and the sector that they're looking to go in. So, there have been some large investments made with regards to infrastructure in IT, But things like real estate in our world would be quite difficult. But opportunity with regards to agriculture and things like that, there are still great opportunities that are coming out of Zimbabwe. It is not a country that we follow very closely at the moment, just due to liquidity on dollar income and land reform, things like that. But is there investments? Yes, there are. There are still some big organizations that there's a lot of mining that takes place. But all of those sectors are out of my speciality. And in real estate at the moment, there are new shopping malls that are still being developed. But I think it is quite a challenging environment as it sits today.
And as we all know, a key inhibitor in Zimbabwe is the lack of its own currency. So how do you see that playing out? And do you think it will drive investment back?
Interesting question. The problem is always how are you paying your investment, and how are you making sure that what your $1 is that goes into the country and what you're going to get back out, what local inflation is running it. At this point in time, I'm not an economist, but when you see the run on the local currency, according to hard currencies, it makes it very difficult for a country to come back with its local currency, and it has to be pegged to something or put into a basket of currencies, in my opinion, to have some kind of ability. But there might be some other panelists that would probably answer that a lot better than I would.
Does anyone care to share a view on that to help us answer this question?
Sure, I'm happy to share a view specifically related to Zimbabwe's challenges. I think there are quite significant problems with the foreign currency regime in the country and the market. When you look at investors in the market, there is broadly a confidence and a trust deficit in the local unit as is, and the way in which the monetary authorities are running what they call a more flexible exchange rate system. But we haven't actually seen significant fluctuation or movement in the rate over the past year or so. So I think they are quite one of the biggest constraints on Zimbabwe in the near term definitely will be the foreign currency liquidity challenges and the deep confidence deficit in the market when you look at the overall sort of operating environment. Of course, this has feed-through impacts to electricity stability, fuel imports. We've seen quite long fuel queues in Zimbabwe as well as the labor market, and we've seen quite considerable erosion of incomes and savings in Zimbabwe due to matters relating specifically to the foreign currency issue.
Yeah. And I think, Zimbabwe gets its fair amount of attention for this part of the region. And there's actually another question related to Zimbabwe. In relation to Southern African countries in general that don't contain domestic and foreign debt, what should they do amid the constrained fiscal space, especially a country like Zimbabwe? Uncertainty, continued lockdowns will, of course, compound this problem. Do you agree with that, Chiesa?
I think in terms of what countries like Zimbabwe should do, and one could say sort of Zambia is in the same conundrum or facing the same conundrum, is to, I suppose, rethink the manner in which they are managing their fiscal balances. I think it should be sort of broader effort towards trying to re-inspire investor confidence really at the end of the day, because we can have initiatives where debt is restructured, where certain debt services are forgiven, etc. But without sort of rethink about sort of managing fiscal deficits, a lot of these countries will end up in the same conundrum, say, a decade down the line. So really, in terms of what countries should do, it's a confidence exercise, and it really comes down to reining in fiscal deficits at the end of the day. And then, of course, that'll then feed through impacts to areas such as debt sustainability and, of course, overall growth.
Yeah. Sure. And turning to the next question related to our other neighbor, Namibia, is agribusiness a likely sector for investment in Namibia? Greg, do you have a view? Chieta? Paula?
Yes, I can.
Yeah,
Sorry, go ahead, Greg.
Oh, carry on.
I think in a country, such as Namibia, yes, there is an opportunity for agribusiness to kind of stir up reinvigoration of growth. And of course, countries across the region are looking to diversify their export bases and of course improve food security. I think that is a key issue, and it is a focus of government. So yes, agribusiness could spur investment, but there are some jitters in the investment community about I suppose the risk of the risks posed to investments from empowerment policies that could be introduced and have been mooted. So in terms of private sector participation, there's a little bit of uneasiness there, but yes, it could be an opportunity for diversification, again, with the right policy environment.
Great. Greg, you want to add to that, perhaps?
Yeah, it's just, the government has to get, any government has to get behind the agricultural sector for it to be sustainable. And if you just look at where we are globally with regards to scarcities, agriculture is always going to be a great field to invest into, but it does need the push from local government to make sure that it gets into the right platforms and is a long-term solution for the country.
All right, thanks for that, Greg. Chieta, there's a question here aimed at Mozambique and the LNG sector, so I'm going to pass this one to you. The government in Mozambique, the LNG sector and security issues is the theme. And the question is, what does this mean in terms of FDI? Does that change how investors perceive Southern Africa?
Look, I think the sort of prevalence of terrorism in the northern regions of Mozambique, yes, this definitely is cause for some concern among the investment community. And from our view, the Mozambican government, or rather military capabilities of the government and security capabilities of the government, have been found lacking in that region. And of course, this has resulted in considerable displacement. If you think around 200,000 people have been displaced, and considerable loss of life. So the human toll of terrorism definitely does dampen investor sentiment on the country as a whole. But when it does come to sort of oil and gas investments, we do believe that there will be some sort of security arrangements made between oil majors in the region, as well as with the Mozambican government. The government has also, it has been discussed in a static platform to try and help support Mozambique from other sort of countries in the region. We look at South Africa as well as Zimbabwe. But in terms of it posing significant risks to existing developments, we don't see huge risks in the near term, especially when you consider the FLNG, or the floating LNG project, that's offshore, and that's rather far away from where the security risks largely lie. But yes, terrorism risks in the northern regions is a concern. I think there's a requirement for greater transparency there, and it's not just a Mozambican issue. These groups are also linked with other militant groups in the eastern regions of the DRC, and they have been reported links with Islamic State between these regional groups. So that is a cause for concern. But specifically for the LNG sector, we do see at least the prospect of security arrangements between the companies and the government itself.
Yeah, maybe just to add to that, we've got a lot of real estate in Mozambique, probably one of our biggest investment countries in our portfolio, and we've been there for the last 6-7 years. And we've built a lot of our portfolio around the oil and gas sector. And what we found is when we did the initial listing on the London Stock Exchange, because of the strength of the tenant that you have within the country and who's signing the leases, the investor sentiment is quite high. But as mentioned, the security does play a factor up north, and there's the human factor that comes into it to say, the security and everything happens thereafter. Is the investment into Mozambique as much as we work very closely with the Central Bank of Mozambique with regards to dollar liquidity and making sure that we can repatriate funds out of the country, the government has done a great job in that. So the investor sentiment and the returns that we've got in the country have been fantastic. But going back to the security issue, that's the one element that needs to be focused on. We have a lot of our investors coming to us asking the questions. They're happy with Mozambique as an investment country, but they want to understand what's happening with regards to local communities and security within the country.
Thanks for that, Greg. I like that tinge of optimism that's come through there, so thanks for that. With a minute to spare, I'd really like to squeeze in one question for Paula, and it's a great question. We've just heard that South Africa is halting its rollout of the Oxford AstraZeneca vaccine. Preliminary evidence shows that it's failed to protect against variants of COVID-19. What impact do you think this will have on the overall vaccination program in South Africa?
Oh, there's your curveball. It's obviously going to slow things down dramatically. And I think this was always one of the concerns with a delayed vaccination program, is we have now seen exactly what the impact is if the virus mutates beyond the scope of what a vaccine can protect against. So yes, it will certainly slow down our vaccination rollout, and it means we're going to have to hang our hopes on other vaccines that can be adjusted quickly, such as the mRNA vaccines. So it adds a whole lot of uncertainty, and it will certainly add time on to getting sufficient coverage for herd immunity in the country. It's a big blow.
Absolutely. Couldn't agree with you more, Paula. And with that, we are exactly an hour on the head. I'd like to thank the panelists for sharing their time, all the effort that's gone into this. It's been a pleasure sharing the platform with you, and thank you very much to the attendees for making time as well. And thank you to Invest Africa for putting this together. Thank you, and bye-bye.